Hello everybody and welcome to class number 2 of P7. Hello. Okay, some familiar names from Friday night appear to be here, which is great. Good to see you guys. Okay, so this is the evening session, having done the lunchtime and the matinee earlier on. So class number 2, following on from what we were doing on Friday night when we started this whole thing off. Good to see you too, Fifi. Right, let's begin then. So on Friday night we did class number 1 and I spent most of my effort on Friday night focusing on how you go about passing this paper so that we could have the right methodology and the right culture throughout the course. So we will be covering obviously technical material, but we will be focusing very heavily on the how do you do it bit rather than just the technical stuff. Hello, Khalid. So we're going to kick off with a little brief, what's the word I'm looking for? Reminder of what we covered on Friday night. We'll then push on with the notes through to the end of chapter 1. But the main effort of class number 2 is looking at our first real past exam question, where we get an opportunity to put what I said on Friday night into practice with some technique, some approach, and we'll see how we get on. And hello, Claire. Okay, 1505. So what, born on the 15th of May or born in the year 1505? I think 15th of May is probably more likely, isn't it? Anyway, right, let us go then. I'll disappear off to one side and let's take a look at a little reminder of some key issues from class number 1. First of all, can I remind you, P7, very practical paper. We will learn more by doing than we will by staring at a page. So, lots of practice. And exam technique, very, very important for me to explain to you, for you to understand, for you to learn, and then very importantly, for you to practice using. The more you practice the technique, the easier it will become for you to do it, and the less you will have to be thinking, 10-pin bowling, the less you will have to be thinking, as you're writing, I must do this, I must do this. We also saw on Friday the importance of dates in questions. I gave you a little example of that, and you'll see that for real in our exam question this evening. And another very important thing I wanted to get over is you must explain every point you make. Imagine there's an annoying small child tugging at your leg every time you write something saying, yeah, but why? What would be the next sentence you would add? Because that's the explanation. So that is what we covered at the beginning. And then we headed off into chapter number 1. And in chapter 1, there are 3 things we need to get through. The third one we've not started yet, but the first 2. We had a quick look at a reminder of some regulatory stuff. And then we looked at something a little more important. And we looked at a bit of money laundering. And since the importance of passing exams is all about practice, I hope over the weekend you have been laundering some money. No, I hope you've not been laundering some money. And if you're wondering why I seem to be in a relatively good mood today, this will not happen very often this term, but I'm quite amazed to say that my football team, QPR, actually won a game at the weekend. Yeah. So I'm happy. We're above Manchester United in the table. Trust me, I don't get to say that very often. Okay, so money laundering. Key points we have seen so far from Chapter 1 are: make sure you know what it is. Money laundering, what is it? Well, the tight definition is it is hiding the true source of the proceeds of crime that you've got. So it's the cover story. And that's why it's important to us as accountants and auditors, because typically a money launderer will use a company, either that they've set up themselves or where they are a very senior person, maybe a director, major shareholder, and they will pass their criminal proceeds through the company, pretending it's sales revenue, with a view to then extracting it at the other end so they get it back again. So, what is it? We've covered. And we looked at the auditor's responsibilities. Yes, Fifi, I will tell you about the 3 steps of money laundering. I was actually going to summarise it just then, but I thought I'd write it down rather than just say it, so it's coming up shortly. Auditor's responsibilities. Well, there's the technical stuff. There is the need to appoint an MLRO, Money Laundering Reporting Officer. There is the need to train staff. There is the need to have KYC procedures, not just to check actual identities, passports, addresses, things like that, but also if you understand the client's business, it will be a lot easier for you to identify when you think something looks a bit strange. In fact, that ties in with Fifi's questions about the 3 steps involved in laundering money. Of course, auditors must also report any suspicions they have that clients are involved in money laundering, and not to tip off a client if you are suspicious. So that's the sort of technical, the knowledge stuff. But then there's the practical stuff of spotting clues in a question. Now, Fifi just asked about the 3 steps of money laundering. I've sort of described that without giving it the names yet. Because what does a money launderer do? They place money into a company. They then create a layer or a stream, a trail of transactions to try and hide where the money originally came from. And then it gets to a point where the money they've put in is just moving around the company like all the other money, and it stops looking different. It's just another chunk of money. At that point, we say it's been integrated with the rest of the transactions, meaning it's then easy to take out because it just looks like any other profit. So when you're spotting clues, you could argue that we can spot clues at the placing stage, and the reason we'd spot clues there is because sales revenue looks higher than the underlying sales records. Or in other words, money has been placed into the company to look like sales, but the records, or your understanding of the business, do not back this up. There was an exam question a couple of years ago where, and I may have mentioned this on Friday, where basically sales revenue said 5 million, but the sales records only said 3 million. Well, that's suspicious. There's another 2 million being reported as sales, but there's no records to back it up. Now that question is a bit simplistic, and I'm surprised in some ways that the examiner chose to ask it. If I am laundering money, I will create fake sales records to support the entire 5 million. Otherwise, it just looks too obvious, surely. Sorry, got something in my eye. Apologies. Still got something in my eye. Yeah, oh, this is very annoying. So, as I was saying, when you are placing the money into the company, common sense says create all the underlying fake records so it doesn't look suspicious. But in an exam question, I guess the examiner's more likely to have a very simple situation where the cash being recorded is not backed up by the underlying records. And she's done that twice, in fact, in questions. We saw in the notes on Friday that the money launderer, once the money has been put in, will try and move the money around, create a stream of largely unnecessary transactions to hide the original source of the money. I mean, if you think about it, if I have I got some money in my pocket? I have, there you go, a useful prop. So there you go, there's £20. And you say, Paul, where did you get £20 from? And I say, well, I got it out of my pocket. You say, oh, okay, but where was it before it got into your pocket? And I say, well, it was originally in my wallet. And you say, oh, yeah, okay, very good. But why was it in your wallet? I say, well, I took it out of the cash box. Okay, why was there £20 in the cash box? Because I put it in there having taken it out of, and if you have lots and lots of stages, you're going to have to ask a lot of questions and do a lot of digging before you get back 500 stages to the point where I say, where was it before then? Oh, it was in the Bank of England because I robbed it last night. So the more layers you have, stages in the trail, moving things around companies, the harder it's going to be to track down where this money originally came from. And you get to a point where the proceeds of the crime have now joined the legal finances you have and to anyone looking, they wouldn't even bother questioning it. It's all one pot of money. And at that point, it's easy enough to withdraw it and spend it. It's almost like imagining that you've got one item of dirty clothing, really dirty clothing, and other items of clothing which are a bit dirty. If you put the really dirty item into the washing machine, for a while you can see it. But after a while, if you look through the door, it's just clothes, isn't it? They have all become one. So that is the job of the money launderer. Put it into a process, move it around the process enough until you get to a stage that no one really knows the difference between that £20 note and that £20 note, and you can spend both of them. Hooray. Okay, sorry Fifi, that was a much longer answer than I'd intended, but hopefully proves the point. I intended to mention that tonight. I'm not getting too bothered about describing the 3 stages. for the simple reason, and I don't know if this is why you're asking it, Fifi, but that was actually asked directly on the June exam about the 3 stages. And having asked it there, the chance of it coming up on your exam like that is very small. Anyway, that is where we had got to. We're now going to go into the class notes and pick it up in there, because we've got a little bit left to do. So we'll race through chapter 1, and through chapter 2. And we'll pick it up at the top of page 14. The need for ethical guidance. What is this getting at? Well, what this bit of the syllabus wants to explain to you is this. As auditors, we have a lot of responsibilities. Some of them are relatively straightforward, and some of them can get very complicated, and therefore as auditors we need a bit of help to tell us what we might do if certain situations arise. Money laundering can be very, very complicated. Why is that? Well, partly it's the fact that the definition of it is so wide, it includes anything from hiding the original source of proceeds of crime that you have stolen, or you have got from selling drugs or doing something else illegal. But equally, if I help you do that, I'm a money launderer. If I look after the money for you, I'm a money launderer. If you or I spend the proceeds of crime, we're money launderers. So any attachment at all to the proceeds of crime, even if you've not started creating the cover story yet, it doesn't matter. So we just saw 3 stages, and even before you place the money, the very fact you've got the proceeds of crime means you're a money launderer. Now, nobody wants to be found guilty of money laundering. It's not good for your reputation. So the very fact that so many things can make you a money launderer means auditors need some guidance on how to avoid getting into these situations. But I can't see that being the thing the examiner would test. Far more likely to test would be something like this. Let's go down and pick an example from this. Let's look at the last one. Money laundering and an audit report. Okay, let's have a little think about this. Let's imagine it is the last day of an audit and you are due to sign an audit report tomorrow. Been auditing a client, it's all gone fairly well, and you have booked the meeting with the board of directors and you're expecting to sign everything tomorrow. And now, tonight, at 10 to 7, one of your staff comes back to the office just before you're due to leave and says, "Boss, I think we might have a problem." And they start describing some bits of paper they've seen and some conversations they've had with staff at this client, and they say, "None of this adds up. It's now dawned on me that a large chunk of sales revenue, I don't think they've sold anything. I think they're overstating their sales revenue, and I think the reason they do it is they're trying to create fake sales. I think they're money laundering." And you look at all of this evidence and you think, yeah, you might be right. So you phone up the money laundering reporting officer who's upstairs and you say, "Look, here's the evidence we've got. We think they might be money laundering." And the MLRO says, "Yeah, you're right, they might be. We'd better report them." So here's your problem. Tomorrow you're due to sign the audit report and you've just discovered that some of the sales revenue is fake because you think this client is money laundering. It's not real revenue. Well, if some of the sales are fake, what does that mean? It means sales revenue is misstated. And of course, Oops, sorry about this. And of course, it's materially misstated, because if money laundering is the reason, money laundering is illegal, and anything illegal has got to be material by nature. Right, so sales revenue is wrong, and you're due to sign the audit report tomorrow. So here are your options. Well, one thing you could do, if your memory from F8 is reasonably strong, is qualify your audit opinion and say, except for the fact that some of the sales revenue is overstated because it's the money being laundered, the financial statements give a true and fair view. Except you can't say that in an audit report because you've got no proof it is money laundering, so they'll sue you. And secondly, you're tipping them off that you think they're money launderers, which you're not allowed to do. Oh. I suppose you could qualify the audit opinion, but don't say why. Well, you can't do that, can you? The shareholders at the AGM will be saying, but what's the problem? And you'll say, legally, I'm not allowed to tell you. That's ridiculous. Option 3. Don't say anything. Say the accounts are true and fair. But that means you're lying to the shareholders. So you can't qualify the audit opinion because you'd have to explain why, and you're not allowed to because you're tipping off the client. So don't qualify the audit opinion, and now you're lying to the shareholders. So it seems that you can't do that, you can't do that, and you can't do that. The only other option then, presumably, is to delay the audit report. But surely, if everything was going well, the client's expecting the meeting and you suddenly cancel it, an unexpected delay, especially if the client asks why is there a delay, might well tip them off as well. Fabulous. So my basic summary here is there are going to be some situations where you're in a where you have got yourself into a place where there is nothing legally correct available to you. You're going to be doing something bad, whatever happens. And in those situations, you need guidance. Now, the guidance is not necessarily going to help much, and probably the best thing you can do is report these guys to the authorities, because you have to. And as you report them, say, look, we're meant to be signing the audit report tomorrow. Tell us what to do. Let the authorities tell you, and make them tell you in writing so you've got proof you just did as you were told. Now that just gives you an example of how complicated life can get. I'll give you a second example. If you look at this one here, professional clearance. Imagine you are leaving as auditor. You're finishing this year's audit off and a new firm will be coming in. And the new firm have written to you and said, hello, we believe you are leaving as auditor. Please can you tell us, is there anything we ought to know before we decide whether to say yes to this new client? Thing is, one of the reasons you're leaving is you suspect this client might be laundering money. So what are you going to say to the incoming firm? Are you going to tell them you think they're money launderers? I mean, they need to know, don't they? But on the other hand, are you really going to tell them this in writing, in a document that your client might get to see? So whenever you have to talk to anybody else about a client, you can see here that talking about money laundering is going to prove very problematic. But it's not just the communication issue. If you were to look through this list, you'll see some other problems involving the law. So let's have a little think. What is money laundering? Hiding the true source of the proceeds of crime. So what if something is a crime in the UK, but in the country where they did it, it's not a crime? Does that count? are you still meant to report them? I mean, this might depend on what the crime is. In the UK, bribery is illegal, and it's illegal to bribe anyone worldwide if you're a UK company or a UK individual. So in that case, who cares where they've done the bribery? But what if it's a crime when committed on UK soil, but in the other country, it's not only not a crime, it's actually accepted practice? Now what? What if it's a crime overseas, but not in the UK? Then what do you do? So you can see here that this could get extremely complicated. And that's why there is ethical guidance trying to assist accountants. You don't need to know what all the guidance is because some of the scenarios are so complicated, they're way beyond the course. As long as you can explain why we need guidance, it's complicated, the audit report issue, talking to other firms of auditors, as companies change auditor, then that is enough. Okay then, enough about money laundering. Just to repeat what I said on Friday, please don't forget it did come up in the exam in June. So instead of going on and on about that topic, let's finish chapter 1 by looking at the last section in here. Laws and regulations affecting clients. So we've got a little audit standard. It's on the F8 paper, so you should have seen this before. But you might not remember it because it's one of those standards on the F8 paper which, to be honest, does not come up very often because it's such a small standard, and if it does, 4 or 5 marks. So if you can't remember about this, don't let it bother you. So what is this all about? Okay, let me explain. Let's imagine that tomorrow morning you are going to start auditing the London School of Business and Finance. We are, of course, a private education college, and the question is, how much do you need to understand about the laws and regulations in the private education industry? Now, I'm part of the management here, so I need to understand the rules and regulations that affect us, because if we breach the rules and regulations, then this company would get into a lot of trouble. We might get fined, penalised, and of course, if you really break the rules, someone might take our licence away, they might close us down, and even if they don't do that, the reputation damage is hardly good for business. So as a manager, I need to know the rules and regulations. The question is, if you're auditing our accounts, how much do you need to know? Well, the clue to the answer is in what I just said. As a manager, I'm worried about the rules because if we are breaking them, number one, we might get fined, and number two, we might get closed down. Well, as an auditor, you should care about both of those things, because they both affect the financial statements, which you are auditing. If a company has broken the law, it creates a legal obligation to pay any penalties, and that brings into play provisions under IAS 37. So if you're auditing LSBF, you need to know the rules that, if broken, could give rise to penalties, so you can keep your eyes open and see if we're breaking them, because if we are, those penalties would need to be provided for. Of course, if we really break the rules, we put our very existence under threat. Especially in highly regulated industries, you break the rules and you could find your licence being withdrawn, you could be closed down. And that is giving rise to threats to going concern status. And any threats to a company's going concern status have to be disclosed by that company in their financial statements to satisfy IAS 1. So the message about audit standard ISA 250 is this: when you audit a company, when you are researching that company before you start, you must make sure you understand the main rules and regulations to which the company is meant to comply. You should also understand the potential for fines and for regulators withdrawing licences, because that impacts IAS 37 and IAS number 1. Now, if you understand that, to be honest, you probably know enough about ISA 250. Just a couple of other points to highlight. There is a common theme on this course, which is if you ever find anything interesting at a client, report it to the audit committee. Sometimes companies might be breaking the rules and management may have no idea they're breaking them. And if you believe management genuinely have no idea, you should tell them as well. The audit committee are great, they're non-executives, but they're not running the company. It's management, the executives, who run the company. So if you think they don't realise they're breaking the rules, it would be polite to tell them. In some industries, for example the banking industry, if you spot a bank is breaking the rules, the chances are you'll have to report that externally as well. So tell management, tell the audit committee, and report it to the banking regulators as well. So lots of reporting in here. If you think your client is deliberately breaking the rules, or breaking the rules and has no intention of stopping, so they're sort of aware of it, but they're just turning a blind eye to it, then I would also question whether you want to keep these people as clients. So in your answer, talk about the need to consider whether you might have to resign. Anyway, that is ISA 250, one of those audit standards that might creep up into an answer, creep up in a question for 3 or 4 marks, but it is one of many audit standards and is never going to be worth more than a handful of marks at best. So there we are. Chapter number 1, done. Time, therefore, I think, for us to take a look at chapter number 2, and the first big exam topic is in here. Money laundering comes up from time to time, but in chapter 2, the first subject we look at is ethics, and ethics comes up on every sitting. So a good opportunity to score some marks here. But I have said on more than one occasion that P7 is a very practical exam. And if we're looking at an area where exam questions are very, very popular, if it's practical, I think the best thing we can do is get into the practical as soon as possible. So just like learning to swim, we're not going to stand here staring at the pool. We're going to jump in and we're going to try and swim. Now, before we do that, I do need to give you some swimming technique for this type of question, so that when we look at the question, we've got something we can apply to it. A very common exam question will ask, here is a scenario, or here are some scenarios. Describe the ethical and other professional issues. Now, if this was an F8 question, it would just say ethics or threats to objectivity, and it would be very specific. Here, what it's testing is not that you just know stuff, but that when asked what are the issues, you can think around a number of things that might be relevant, even if they're not directly mentioned in the story. So you've got to work out the issues for yourself, and that's what makes it rather more challenging. The good news, though, is that the P7 exam has been so similar for so long and the questions so repetitive, annoying people like me have gone through all the questions and all the answers and worked out a master plan because all the answers look the same. So I'm going to tell you what the plan is, and then we're going to apply it to a real past exam question. And if you're thinking, ooh, well, it feels a bit early to be doing that, bear in mind it's even earlier than you think, because we're going to do this before we open chapter 2 and look at the notes. We're going to do it using our common sense and a little bit of memory from F8. So here we go then. If I see this question and I see ethics issues, what am I thinking? Well, I'm thinking of 4 things. The first one I'm thinking of is a big exam topic from F8, threats to the auditor's objectivity. Remember, auditors need to be objective and be seen to be objective, because that way we're more likely to issue a correct audit opinion, and if people think we're objective, they're more likely to believe that audit opinion. Now, I know we're revising, and I know that many of you will have done F8 some time ago, or maybe even been exempt, but the sort of stuff I'm talking about here is stuff like self-interest threats, self-review threats, etc. You may remember, or you might not, that there are 6 types of threats to objectivity, and they begin with the letters SSAFIM. SAFIM. Self-review, self-interest, advocacy, familiarity, intimidation, and the management threat. And we'll be looking at all of those in Chapter 2, all in good time. A second area to consider when a question says ethical issues is, are we looking at something where we should be reporting it outside of the company? In other words, should we breach the usual client confidentiality? Is this something that needs to be reported? Again, revision time. You might remember from F8 that with confidentiality there are some things that must be reported externally and some things that you might if you feel it's in the best interests of society. Apart from that, I'm saying nothing more at the moment because I think you probably just about remember this. The third issue from F8 on ethics is conflicts of interest. So this is where there are 2 clients involved in the story and there's some link between them, such that whatever you do for one client is likely to have an impact on the other. Now, all of those are about the auditor's behaviour, but there is a 4th one which is not about the auditor, and we've just seen it in the class notes at the end of Chapter 1. Because another bit of ethics we ought to consider when looking at these scenarios is not the behaviour of the auditor, but the integrity of the client. So based on my reading of old exam questions over the last 20 years or so, those are the 4 main themes you're looking for. What does it mean by professional issues? Well, annoyingly, a professional issue is any issue which affects a professional, which doesn't really help us much, does it? As far as the P7 course is concerned, it includes things like, when you read the scenario, can you see any clues that this client might be involved in money laundering? Number 2. Is there anything happening in the story where the auditor's liability is at risk? In other words, auditors might get sued. Because as an auditor, if there's a risk of me ending up in court, I want to know about that. That's a huge professional issue. The next one is something we've not covered on P7 yet, but that's fine. We can still use it with this exam question. We don't have to get too far into it. And that is, when you read the story, are there any practice management issues? Now, we'll keep it simple at this point because this is Chapter 3 and we've not done it yet. But is there anything the firm seems to be doing wrong? Anything wrong with our firm's processes, policies, etc.? And then the final area to look at is this. Typically in these questions, you are the auditor of this company. Well, one professional issue then is going to be any impact on your audit from the story that you're reading. So imagine that you've just been told the story in the scenario. Would you now go and tell your audit staff, guys, because of this, when you're auditing that, you will need to? Because if there is, then that's a professional issue. Now I say, will the audit work be affected? It's not just the type of work you do, it could be when you choose to do it. It could also be which staff you feel you want doing the work, so it could be a staffing decision. Anything affecting the audit process at all. You are quite right, Ramshall, we have not covered auditor liability yet, but that's no great problem because you have studied law, so as long as you understand what liability is, you do something wrong and you could get blamed for it. That's as technical as we need to get, so please relax. Liability is also in Chapter 2, by the way, at the end. And yes, we will cover all of that. But I need to emphasise the importance of how we do the questions, not the technical knowledge. So you'll find from time to time on the course, we do the question and then we look at the chapter, not the other way around. Partly because I want to emphasise the questions, but also to prove to you that you can make a decent attempt at some of these questions right now. Because most of the knowledge comes from F8, most of it is still in there. I know you think it probably isn't. But what we're going to do right now is go to a past exam question and let's see if between us, you and me, we can work out what some of the issues would be. And the way we're going to do it is we're going to take this list and we're going to go through it point by point and ask, is that relevant to that story? Let's see. Let's see if this works. Now the question we are going to be doing is in the revision kit for P7. Don't worry if you don't have it in front of you because I can put it up on the screen. Oh, that's interesting. That says Advanced Performance Management. Have I just spotted? Isn't that interesting? Funny how you spot mistakes. That'll be the auditor in me then. It's definitely the P7 kit, but the heading on one page is wrong. And yet the heading there is right. So I don't know what's happened there. Anyway, we're going to flick all the way towards the back of the kit. Because right at the back of the kit are a couple of exam papers where we've chosen, instead of taking the questions out and putting them throughout the kit, we think it's useful for you to see what a real exam paper looks like and the balance of the questions. And if you had the kit with you and went all the way to page 149, you will find the June 2008 exam. Now we are going to move onwards and find question number 4. This is page 154, and just to remind you, question 4 from June 2008. So your examiner wrote this question. Now dates are important, and in order to make the questions in the kit feel a little more up to date, we update the dates every so often. Haven't done it recently, as you can see, but for the purposes of this question, we are going to assume that today's date is a few days into December 2010. In most P7 exam questions, there are dates in there, and the dates, as we saw on Friday, can be very important to what you write in your answer. Now, let's just make that a bit bigger, I think, so we can see. There we go. So, the key always is don't start with the story, start with the requirements. Because that's what you've got to do. The story is there to support the exercise you're required to do per the requirements. So it says, identify and discuss So some element of explanation is required. It doesn't say state, it doesn't say list, it doesn't say define. No, it's not factual stuff, it's discuss. So we need to say why. The ethical and other professional issues. Okay, so that's exactly what we were expecting. This style of question comes up loads. So in our answer, what are we thinking? We are thinking this. So on exam day, in the first 15 minutes, I can't write my actual answer, but I can write on the exam paper. I would now go in here and say, right, ethical, 4 things, yeah? I would say SAFEM, the threats to objectivity. I'd say conflict of interest, confidentiality, integrity of client. Just to remind me of the 4 areas I want to have a think about. Other professional issues. I'm thinking money laundering. I'm thinking liability issues. I'm thinking practice management. And I'm thinking audit process. So 2 lists of 4. Scribble them down as you're reading the requirements. And now you are going to think about the right things. Another important point to note are the marks. There are 3 stories and they differ a lot in marks. In fact, story A is about half the question. B plus C is about the same as A in total. So when we're planning our answers, we don't just plan an ethical professional issues answer. In part A, we plan an 8-mark answer. We are looking to say 8 things. In part B, we're looking for 5, and in C, we're looking for 4. Now, this is what we're going to do. I am going to show you how to plan and then write the answer for the first one. It takes quite a long time to do this because I'm obviously talking as I go and explaining my thought process, which slows everything down, and then I've got to write the actual words as well. But I think it's very important when we do this very first question on the course that you get a feel for how I go about generating an answer, how I go about writing an answer, and thinking about 10-pin bowling as of Friday, what is going through my head as I'm doing all of this. But I'm only going to do it for the first of the 3 stories, otherwise we'll be here till about midnight tonight finishing it off. I'll then plan the answers for the second 2. Okay, so here we go then. Part A, 8 marks. We're going to read the story, make sure we understand what's going on, and then I'm going to run through those 2 lists to generate some issues. Once I've generated some ideas, then I'm going to think about the exam technique as I'm writing the answer. So, just to finish off the requirement, because I seem to have not done that yet, we need ethical and professional issues, and we need to recommend what action the audit firm should now take. Issues, action. So, for the first one, which is 8 marks, I'm expecting about 4 issues and 4 bits of action. And then I know I've got a good, complete 8-mark answer. So, first things first, we need to go and read the story. So, here we go. You are an audit manager in Smith & Co, firm of chartered certified accountants. You have recently been made responsible for reviewing invoices raised to clients and for monitoring your firm's credit control procedures. Well, credit control is trying to get customers to pay the bill, so I've been put in charge of looking at how we bill our clients and how we get them to pay. Okay, interesting stuff. Several matters came to light during your most recent review of client invoice files. Okay, here we go then. So the first one, Norman, a large private company, has not paid an invoice from Smith & Co. dated the 5th of December 2009. Well, if today is the 4th of December 2010, that invoice is 1 year old and they've not paid it yet. Well, that's an issue, isn't it? Taking a year to pay something seems like a rather long time. It's for work in respect of the financial statement audit for the year ended 31st of August 2009. Well, if it's currently December 10, that means the year end 31st of August 2010 has also happened. And if we were billing the client for the audit in December 2009, that probably means we're about to bill them for this year's audit. Which means we've done this year's audit, probably, without getting them to pay for last year's, which seems remarkably stupid to me. A file note dated the 31st of May, so that's, 6 months ago, states that Norman is suffering poor cash flows, client's in trouble, and is unable to pay the balance. So, a year ago we invoiced a client. After 6 months, we realised that they were struggling to pay, and now another 6 months have followed. What's going on? This is the only piece of information in the file you're reviewing relating to the invoice. So that's it, nothing else. The trail goes cold. You are aware that the final audit work for the year ending 31st of August 2010, which we've not invoiced them for yet, is nearly complete, and the audit report is due to be issued imminently. Okay. So we need some issues and we need some actions. I'd imagine the actions have got to address the issues that we raise, so I'm going to go for a 2-column approach for this. Before anyone asks the question, can I do columns? The answer is yes. You can do what you like, as long as you still produce an answer which has sentences, paragraphs. If it's properly written, that's fine. I know it's worth 8 marks, so I'm going to aim for 4 of those and 4 of those. And before I start writing the answer out, I'm going to plan the answer. Now, some people like to plan in their head or even on the question paper. Personally, I like to make a few brief notes. Now, if I was doing the exam, my brief notes would be very brief because I need to get writing the actual answer as soon as possible. But I'm not doing the exam, I'm helping you understand this class. So my plan here will end up being a bit more detailed than you need to write, just to make sure you understand my points. Okay, well, we've read the story. We know what's going on. So what I'm going to do now is go to my technique, ethics professional issues. Even though 1 or 2 issues might be leaping out at you at this point, no. Methodical is the best approach. So here we go then. Ethical issues. Well, there were 4 of those, weren't there? Is this a conflict of interest between 2 clients? No, there's only 1 client involved, so it's not that. Is there something going on which would normally be kept confidential, but that which we should consider reporting and breaching the client's right to confidentiality? No. Is there any question about the integrity of the client? Have they behaved badly? Well, they've not paid the bill, but from what I can see, it's not that they're deliberately withholding the money, they haven't got the money. So I don't really see this as an integrity of client issue, which means there's only one thing left on my ethical issues list of ideas, and that is threats to my objectivity as auditor. Well, there are 6 of those. As I said, we've not opened chapter 2 yet. Your memory of this from F8 might not be perfect, so let's just run through the 6 and see what we think. The management threat is where an auditor gets involved in running the company and making decisions for the client. Well, that's not happening here, is it? So it's not that. The advocacy threat is where the auditor represents the client's opinion in some situation. We're seen to be supporting them. Well, there's no evidence of that going on, so we're down to 4 more threats left. The self-review threat is where the auditor, in their audit work, ends up reviewing something that's in the accounts that the auditor played a part in. Well, there's nothing of that going on here, so we're down to 3. Familiarity, self-interest, intimidation. Is there any evidence of a familiarity problem here? Well, this is not the easiest point. This is one of the harder points to spot. But if someone owes you money, would you let them off for a year? And not only let them off, but carry on doing things for them, even though they've not paid for the last things you did for them? And the answer is, if they're one of your friends, maybe. And if they're not your friend, no. So I reckon there's a potential familiarity threat here. Why is our firm being so favourable to this client and allowing them not to pay the bill? So in my plan, I think there's a familiarity threat. What about self-interest and intimidation? Could the client use this to intimidate us? Could they put pressure on us? Even if they don't put pressure on us, is it in our best interests to be nice to them while they still owe us this money? Well, the answer to both of those questions is yes, isn't it? Because the client might say, look, don't find any problems in our accounts this year and we promise we'll pay you the money we owe you. Or they might say, look, if you report going concern problems, we will get into more financial trouble and we won't be able to pay you. So keep quiet about the going concern, auditors, and you're more likely to get paid. And even if the client doesn't say any of that, the auditors might decide that the best thing to do is be very nice about this client and say they're in wonderful financial shape, all to try and make sure they get paid. So it seems to me there is both a self-interest and intimidation threats to try to make sure we don't upset this client. Oh. Well, maybe you spotted that. If your F8 knowledge is pretty good, then you may remember that unpaid fees are seen in the same way as a loan. Someone owes you money, creates a financial link. The problem is we don't need 2 issues, we need 4. So we need to go through the other list as well. Nikita, it's a large firm, so fee must be a lot. We could be dependent on them. Again, you could bring that into your answer. The question did say, if we just go back and have a look, Norman is a large private company, and as a result, the fee they owe you is likely to be pretty big. And if they're big, they're more likely to try and push you around. So yes, very sensible point. Well spotted. So we've got 2 issues, but now we need another couple. So now we go down the other professional issues list. Are there any clues of money laundering going on? Well, money laundering is typically where sales revenue is overstated because there's fake sales in there, and no, there's no evidence of that at all. Is there a concern here that the auditors could get sued? Any suggestion we might be doing something wrong? Well, not on the face of it, no. Practice management. Is there any suggestion that there is a problem in our own firms, our own accounting firms' processes? And I think there is. 2 issues, in fact. For example, if this was noted 6 months ago, why has nothing been done about it? Our credit control is rubbish. There is no evidence we've made any attempt to get these guys to pay. In fact, quite the opposite. Because when they said, would you like to do next year's audit as well and be reappointed, we've totally ignored the fact they owe us money and said, yeah, go on then. So I think a third issue here is we have weak credit control and weak reappointment procedures. Don't forget, it's not just new clients who you have to go through a process for before you say yes. Existing clients asking you to carry on as auditor, you should go through and make sure there are no reasons why you might want to say no. If they've not paid for last year's audit, surely that is a reason to think about saying no. Okay, we've got one more thing on the other professional issues list, and that is audit process. So, you know that one of your clients has cash flow problems and hasn't paid for last year's audit as a result. Should that be impacting what happens on this year's audit? And of course the answer is yes, because we've got a going concern threat. As we've already seen tonight, that raises the issues of IAS 1 disclosures in the financial statements. And given how little the question says about any of this, I am now tempted to believe that if we look at the audit files for the work that's been done so far, we might be overlooking how bad this company's position is. You could even go further and say if they were in cash flow problems 6 months ago, might they have been in cash flow problems 12 months ago when we originally billed them? Maybe this should have been a factor considered at last year's audit. So maybe last year's audit report should come into our answer. And if there's evidence that you've got last year's audit wrong, maybe auditor liability is now an issue. Because if anyone discovers that last year this company was not in a good going concern shape and you ignored it or didn't spot it, maybe we'll get sued. The point here is that it's not the biggest story in the world, and getting 4 issues out of it is quite difficult. That's why we use the checklists. It gives us much better coverage of the points by forcing us to think about issues that otherwise might not pop out of our heads. Well, we've got 4 points at least. What about actions? If you're worried there's a familiarity threat, that we're being too nice to this client, what do you do next? Well, if there's a familiarity threat, try and find out who is on the audit team who seems too close to the client and consider rotating staff. If you feel the whole firm has become too close to this client, maybe it's worth resigning. But given this year's audit is almost finished, it would be a little late to resign. If you're worried that this year's audit might suffer familiarity threats, you need a safeguard. And a good idea would be to get a second partner to do what we call a hot review of the audit files before the audit report is signed. Get someone not connected with this client to go take a look. Self-interest and intimidation threats. Well, as Nikita, I think it was, yes, pointed out, this is a big client, so we might want to consider whether we are too fee dependent on this client. And again, if we think we are, maybe we should consider resigning. But if you're worried the client's going to push you around because they owe you money, another thing to solve this is stop them owing you money. One thing that we must surely do at some point soon is try to agree a payment plan. And I would do that before any other work is done. Someone has got to say to them, look, I'm sorry, but we cannot continue working when there's a strong risk we're not going to get paid for any of it. So until you pay something and agree a plan to pay the rest, we're going to have to stop. Weak credit control and weak reappointment procedures. Simple solution to that. A review of these procedures and look for improvements. And one obvious improvement would be do not accept reappointment if any fees are owed. And then there's the going concern threat. What are you going to do about that? Well, given we know that they've got going concern issues, I would do a detailed going concern review before the audit finishes. I'd be looking at their cash flow forecasts. I'd be looking at what sources of finance they've got. And you could bring the dates into your answer by looking to see whether it's worsened since May 2010, when that note on the file first suggested there's a problem. Now, this is the third time I have run this class today. I'm about to write the answer just for part A. We'll then plan B and C. And you know what? I would put a lot of money on the fact that what I write now with you guys won't be the same as I wrote this afternoon and won't be the same as I wrote at lunchtime. It'll be very similar with the same sort of points coming up. But one of the reasons people hate practicing written questions is they know that when they write an answer and compare it with the examiner's answer, it won't be the same. It's the nature of words, isn't it? With numbers, you're either right or wrong, but with words, there's a million ways of explaining it, and often lots of different issues that could arise. So don't let that bother you. The key here is think the right technique while you're writing. When you look at the solution, does your solution have the same basic feel to it? Is it covering similar points? And if it doesn't cover all the points, relax. Okay. So I'm going to write an answer. I'm not going to write it in red, you'll be pleased to hear. So here we go. This is the actual real answer I would write. Part A, issues, actions, and this is what I'm thinking. I'm thinking, explain every point I make. Try and say because. Number 2, use the dates where possible, because dates tend to be relevant. Number 3, in order to get enough detail down, I am looking to write 2 to 3 lines per point that I want to make. Because I'm only writing on half the page, that 2 to 3 lines becomes 4, 5, 6 lines. Okay. And headings, if you can put some headings in, that would be great. So the first issue was the familiarity threat. So I would write familiarity, underline it, and what would I say? I would say that allowing a client to not pay for 1 year suggests our firm might be doing them a favour. Which might indicate we are too close to them. So that's the point I'm trying to make. Whichever words you choose to use doesn't really matter. It's a clue that we might be too close to them. We might not. It might just be our terrible credit control procedures, but maybe we're too close. But I've not really explained it yet. So what? We're too close. What is the importance of that threat? The importance is this. So here's my because. As a result, we might issue a favourable audit opinion ignoring financial statement problems. And even if we don't, the shareholders, if they're aware that the bill's not been paid, might assume we would. Now that's about 7 lines, which is about 3.5 lines if I'd written all the way across the screen. And that tells me I can now stop, because that is typically about the right amount to get me a mark. And the other reason I need to stop is if I keep writing, I'm going to run out of time. 2 to 3 lines across the whole page, 4 to 6 lines, half a page. If you write any more than that, I can't see how you're going to keep up with the clock. Okay, actions. So what did we say for actions? Well, I said wherever you've got familiarity issues, consider rotating and get someone to review the work and make sure the existing team have done it right. So I would say if any key audit staff, you know, the people making the decisions about allowing them not to pay, it won't be a trainee, will it? The manager or probably the partner has said it's okay, let them take their time. So if any key audit staff have been on this client for greater than 5 years, replace them with independent staff. Put some fresh faces in, because they are far less likely to be unnecessarily nice just because the client's big or they're friendly or whatever. Secondly, there is a concern we might be doing the audit wrong because of the familiarity issue. I would therefore get an independent second partner to hot review the audit files to verify full audit work was done. Get someone to make sure we've not been cutting any corners. Now I've given 2 actions there, but they're both relatively short. That should be worth at least 2 marks. And if you're now sitting there thinking, well, there's no way I can get that stuff down that quickly and think that fast, I would say to you, you need to practice then, because that's the sort of speed you should be coming up with by the time you get to the exam. Of course, bear in mind, I'm the tutor. I've been doing this many, many, many years. I will be quicker and better at it than you. That's a fact, I'm afraid. Live with it. And you don't need to produce this. This is what you are aspiring to. If you can do 2/3 of this, you're way above the exam average, trust me. So the key is think. Think explanations, think how long should I write, think headings. Add all of that to the technique I showed you for coming up with the ideas in the first place, and that is how you practice getting good answers out. And of course your job is now to practice it a lot before exam day. Second point was the self-interest and intimidation threats. So again, I would put a little heading in, helps to break the answer up. So the point I was getting at here, quickly think it through in your mind before you start writing, is I am worried that we might be too nice to this client and ignore things, hoping they'll pay the bill, or they'll threaten not to pay the bill unless we're nice. So, the audit staff might feel under pressure to ignore financial statement mistakes to avoid upsetting this big client. In order to maximize the speed of receiving the old fees. With all threats to objectivity, the underlying problem is you end up giving the wrong audit opinion. So I'm going to end up saying that again. I'm not going to say it in as much detail because it's the same as the first point in that respect. So this could lead to an inappropriate audit opinion. Okay, action. Well, I've already thought about the action, so let's go and have a look. Check how fee dependent we are and agree a payment plan. So, check the fees from this client as a percentage of our firm's total fees to assess if our overdependence could lead to this objectivity threat, because it might not be a problem. We don't know how big the fees are, of course. But the other thing we should surely do is ask the client to agree a payment plan. Now, bear in mind we've not invoiced them for this year's audit either. So I would say for both old fees and this year's fees, before any further work is done. Okay, 2 issues down and dealt with actions. Now, what I hope you agree, or can at least see at this point, is the points up on the screen are not exactly really high-level technical points. They're very similar points to what you might write in F8, and frankly are largely common sense. Really, the key with a question like this is it's never going to be technically difficult. It's just having a format to manage your ideas and having practiced the questions enough to know how to explain them best. Okay, 3rd point. Weak credit control and reappointment procedures. Again, heading's always a nice idea to break up the answer, put a bit of space in it, make it look neat. So I would say to allow 1 year without payment, especially after cash flow problems were noted 6 months ago shows our firm's credit control is weak. Also, accepting reappointment despite prior year fees not paid also shows weak reappointment procedures. This could lead to heavy losses for our firm, especially, of course, if repeated with other clients. Because if this is a systemic problem with our firm's procedures, and this is just one example client, if we're doing this with other clients and letting them not pay, this could be a disaster. So, in terms of action, what are we going to do? Well, we've already chased this client. We've said that in a previous point. So, I think we need to get someone to review our procedures in these areas and recommend immediate improvements. I'd also be tempted to have someone go through all outstanding invoices, and if there's anything else that's last year's fees or more than about 3 months old, I would employ someone to start chasing these and start getting some money in. You'd even get a mark in this question if you suggested factoring out debts and getting an outside debt collection company to chase the bills. A lot of accountancy firms don't like doing that because in accountancy your relationship with your client is very important. It's a very personal business, and if you start having people sending what can be seen as threatening letters, it's not a very clever idea. But in theory you could suggest that. Okay, well there's one more issue that was raised, and that was the going concern threats. So, 6 months ago, clear going concern threats were noted. Now we need to always explain why these are issues. So the issue is that any serious threats must be disclosed in financial statements by the company, by the client. And so a detailed going concern review should be done before signing the audit report. Now, it may be that this has already been done, or at least started. It suggests in the question that this audit is almost finished, and if it's almost finished, going concern should have at least been assessed in part. But typically, auditors like to get right up till just before signing so they can look as far into the future as possible. So the actions I would suggest would be to review the going concern audit work done so far, and probably, given we know the client's got problems, extend it to look at the latest cash flow forecasts, alternative sources of finance, to see if client's position has worsened since May. Because of course in May the issue was first identified, so it'd be interesting to know whether things are about the same, if they're getting better, if they're getting worse. Right, well that took a while, as I said it would, because I've analysed the requirements and talked about it as I'm doing it. I've then applied my technique to the first story, done an answer plan, and then written it out in full. In exam time, of course, all of that's got to happen a lot more quickly. But then a lot of it is me thinking, and I don't need to write that down. I'm only doing it to help explain to you what you need to be thinking about on exam day. If we just take a quick look at the answer, you'll notice that all of the points are roughly the same length. That comes from practice. It is not that deliberate. I just naturally end up writing about that amount for 2 marks. But as I said before, the quantity that I write as a well-practiced tutor who's done many, many questions over and over again will always be more than what you write. It's not the quantity, it's the quality. As long as you are thinking as you write about putting the dates in where possible, always say, why is it a problem? Don't just state facts. Aim to use the word because as much as you can, then you are going to be writing good quality stuff. Now to finish the question off, we need to look at the other 2 stories, which thankfully are shorter. And all I'm going to do for those is answer plan them. Writing out one in full is enough. And just a reminder, I did write every answer in this revision kit, so if you want to see my full answers for all 3 of these, they're in the book. I suppose the interesting thing now would be to compare the answer in the book with the answer I've just written. It won't be identical, because I wrote the answer in the book some time ago. As I said before, whenever you write answers, don't expect them to be perfect. Just see, are you coming up with the same main themes? Okay, let's go look at story B. It's worth 5 marks, and again, we're going to go through those checklists because we need issues and we need actions. But this time, just a plan. Okay, second one then. Wallis, a private company whose business is the manufacture of industrial machinery, has paid all invoices relating to the recently completed audit planning for the year ended 30th of November. So there's the year end. Today, remember, is December the 4th, just 4 days after the year end, and that fits in with the story. The planning would be done before the year end. The actual audit work would then happen after the year end. So we're in the middle. And it seems we've already billed them for the planning work and they've paid it. Hooray. So no obvious issues in there. However, In the invoice file, you notice an invoice received by your firm from Wallace. Interesting. So the client has invoiced us. Strange, normally meant to be the other way around. What's going on? The invoice is addressed to Valerie Hobson, the manager responsible for the audit of Wallace. Okay, presumably Valerie knows more about this then. The invoice relates to the rental of an area in Wallace's empty warehouse with the following comment handwritten on the invoice. Rental space being used for storage of Ms. Hobson's speedboat for 6 months. She is our auditor, so only charge a nominal sum of $100. Aha. So what's going on here then is a member of our audit team is getting something from the client at a much lower price than would normally be charged. Right. Now, before you get too excited, yes, I know what you're thinking. You can see a problem here, an issue. Quite right. Please don't forget we need 5 marks, not 1. So keep it stored in your head and we will still go through the checklists as before. Valerie Hobson said that the invoice should have been sent to her private address. Well, no shock there. She didn't want us to know this was happening. Unfortunately for her, the client has sent the invoice to the audit firm, which means we've now seen it. Otherwise, there's a pretty good chance we would never have known about this. You are aware that Wallace sometimes uses the empty warehouse for rental income, though this is not the main trading income of the company. Well, that could be useful, because if they've rented it out to other people, we can find out how much they usually charge, which means we can then work out just how much of a benefit Valerie has had. But she's definitely had a benefit, because it says in here, she is our auditor, so only charge. Well, those words tell you she's getting a big discount because she's the auditor. Okay. So what are the issues? Well, what I'm going to do is go through the lists. I'm not going to jump in with the obvious one first of all. Let's go through and see what falls out. Is there a conflict of interest between 2 clients? No. Are there any issues in the company which would normally be confidential but we might need to report to someone else? No. Any question marks over the integrity of the client? Why is this client being so nice to the audit manager and letting her rent space for her speedboat for 6 months for only $100? Shouldn't a client know that being rather nice to the audit staff is potentially unethical? Yes. You see, I know there's a more obvious point, but with 5 marks we need more than one issue, and there is an issue here, which doesn't begin with a C, about the integrity of the client. Is this an attempt to bribe the audit manager? It might not be, but the nice thing about these questions is it's not asking you what the situation is, because you don't know. It's asking what could the situation be. So feel free to be suspicious. Okay, but the other ethical issue on our list is threats to objectivity, SSAFIM. And when members of the audit team are getting things from a client cheaper than they should do, or for free, well, this is gifts and hospitality, isn't it? That creates a benefit to the audit manager and therefore a self-interest threat. If you think it's a bribe, I guess an intimidation threat. But if she's allowed to store her speedboat there for virtually no money, she's going to be thinking nice thoughts about this client. Now, the temptation at that point is to move over to the list of other professional issues. But before we do that, let's make sure we've considered all 6 possible threats to objectivity. We've got intimidation and self-interest in our answer. Self-review? Well, I can't see any obvious issue there. Okay, fair enough. Given this invoice has come to the audit firm, could you argue that she would ignore it because she doesn't want to look at it? But it's only $100, so it's hardly an issue for getting the accounts right. Advocacy? No. Management threat? No. Familiarity threat? Yes. Because whenever people are nice to someone, ask yourself, why would you be nice to a perfect stranger? It might be there's no attempt at a bribe here. It might be this is one person being nice to a friend. So it might indicate a familiarity threat. Because you do not do generous deals for random strangers. So I reckon I can get 3 issues out of the ethics, not just the one that is probably the most obvious. And then I think, right, let's now move on and have a think about other professional issues. Money laundering. Well, there's no evidence of any sales revenue issues here, so no. Liability. Is there a risk our firm could get sued? Well, our firm's not really done anything wrong, so no. Practice management. Are there any issues with running our firm? Yeah, there is really. We've got a member of staff, an audit manager, who is breaching the ethical rules. Now, whether that means she's been badly trained, whether that means she should never have been hired in the first place, I don't know. But we've got a member of staff who is misbehaving, and when you're an audit manager, you should know about this. You're not a trainee anymore. Notice what she said about that invoice. It should have been sent to her private address. She tried to make sure we didn't see this. And then the final issue on my checklist to think about is audit process, will it be affected? Well, the audit process has already been already been started. The planning's been done before the year end. And now we've discovered that the audit manager has a fairly severe threat against her objectivity. Wouldn't she have done the audit planning? We've got a big problem, because that audit planning that's been done is now potentially unreliable. So audit planning probably done by Valerie. And given what we've just seen, it appears that it might not be a good audit plan. Okay then, actions. Well, if we're worried about the integrity of the client, we might have to consider resignation. In terms of self-interest, we ought to discover just how valuable this is. So let's go and see what the client usually charges to rent out that space, because then we can see how valuable this has been. Because the more value, the more of the threat there is, because the more happy she will feel about the nice deal she's got. Might indicate a familiarity threat. Well, with that one, I'd be asking how long Valerie has been on this client. And I would certainly be suggesting it's time to rotate her off. But then there is another reason why we need to rotate her off. In fact, 2 other reasons. Her bad behaviour and the fact that I think someone else needs to look at the audit plan. For the bad behaviour, this is likely to lead to disciplinary and possibly reporting of her to the ACCA. She's almost certainly breached the code of conduct. We will ask her first what's gone on, give her a chance to defend herself, but based on what I'm reading so far, this should never have happened. And there is a chance she could get reprimanded by the ACCA. We might even consider sacking her. And I would get a second manager to redo the audit plan. I mean, go and review it if you like, but often reviewing someone else's work, it's actually quicker just to go and do it yourself. I'd start again. Whew. So, when you've got a decent technique, you can often find that these questions come up with a lot of issues. That one is worth 5 marks. All you need are 2 to 3 issues with actions. You don't need all of them. But notice how powerful the lists of ideas are in helping to think about things you might otherwise have never considered. And they're fixed lists, 4 things on each. 4 ethics, 4 other professional, on a question type that almost always comes up on the exam. You've got to learn them, haven't you? Common sense. Right, we've got one left to look at. Thankfully, the smallest of them all. 4 marks. Issues and actions. So let's go back to the question. And take a look at the last one. In the miscellaneous invoices raised file, an invoice dated last week has been raised to software supply company, not a client of your firm. Well, if they're not a client of our firm, why are we billing them for something? Weird. The comment box on the invoice contains the note referral fee for recommending software supply company to several audit clients regarding the supply of bespoke accounting software. Bespoke simply means made for each client. It's like when a tailor makes a suit for you. If you buy clothes in a shop, they've been made for average looking people. Bespoke means made for you. So, presumably at some point in the past, this software company came to us and said, would you recommend our services to your audit clients? We presumably said yes, how much? And the software company said, we'll pay you some commission. Now this comes up regularly. Given it's only worth 4 marks, you might feel you can dive straight in and pass this without going through my list, but I'm going to go through the lists. Conflict of interest between 2 clients. No, software supply is not even a client. Confidentiality issues that might have to be reported outside. No. Integrity of client. They're not a client. And anyway, there's nothing in here suggesting anyone's done anything wrong. Threats to our objectivity. Now you need to be a bit careful with this because the threats are to the objectivity of the audit report, and the software company is not our client, so we don't audit them. However, we do audit clients who are now using the software we recommended, and that suggests to me a self-review threat. Because, always explain why, we might not admit the software is causing errors in clients' financial statements because, of course, we're reviewing the very software we helped recommend. This one is a sort of either self-review or self-interest. It's not in our interest to flag up poor software when we're the ones who recommended it. But there is actually another issue here as well. We recommended this software. We have given an opinion to clients that they should use this company. And there's a threat in there as well. Because we might have only recommended SSCo to earn the fees. What if the quality is poor? What if the software is not very good? Right, so we have got ourselves here some threats to the objectivity of the advice we've given, a non-audit service, and also the audit reports of any clients who are using this software. Right, so those are some threats to objectivity. Before we do the actions, let's have a quick think about other professional issues. Money laundering. No. Is there a risk of us being sued? Well, I suppose if we've recommended a company and it then turns out they're rubbish, that would be negligence because we're making a recommendation without checking it out first. So there is a possibility that we might get sued for poor advice if it's proved that SSCo is a bad company. You see, liability could come up. So, practice management. Can't think of anything obvious. Audit process. Well, are there any issues with our audit process? I suppose there is a risk that our audit staff on any client using the software might reduce the amount of testing they do, assuming that the software is okay. And that is a point, but that's sort of the same as the first point I've written already. We only need 4 in total. I've already got 3 issues. I think we're about there, to be honest. Actions. Well, that self-review threat's potentially dangerous. Normally with self-review, you make sure the staff doing the audit work are not the same people who recommended the software. And that can certainly help. However, you might feel that your firm has recommended the software and therefore your firm should not be auditing it. You might therefore want to consider resign from any client using the software, or stop recommending it to audit clients. Presumably you've got clients who do other things. They're not audit clients. You do, I know, tax advice for them. Recommend it to them. That way you wouldn't have the self-review issue. Now, it's not the greatest point in the world, because if you've earned a small commission for recommending software, you wouldn't want to give up audit fees into the future just for that. But it might get a mark. It's a possible solution. What if the quality is poor? I don't know. I would review, did we check SSCo before recommending them? If not, I'd be checking them now. Bit late in the day, but better late than never, as they say. And also, whenever people earn commission or referral fees, typically they are required to tell the customer they're earning it, so the customer understands that there is a reward and that might impact the objectivity of the advice they're giving. So we should always tell clients in writing we get a referral fee and get client to acknowledge they've been told. As I said, it's true in many things. When you are looking for mortgage advice, if someone has a link to a bank and said, look, I can recommend this mortgage, but just so you know, if you take this mortgage, I get paid a fee, that's standard, and it's the same for accountants. You might get sued, but if you've now checked them out and you're happy they're okay, great. If you check them out and decide you shouldn't have been recommending them, stop recommending them. And there we go, my friends. We've got ourselves an answer. 3 stories. All of them have both ethical and professional issues in them. All of them are on subjects that have come up in other exam questions as well. So the repetition rate and the recognition rate here is very, very high. That's why the practice is critical, because then you'll be comfortable with the issues that you're seeing in front of you. But just to make sure you spot enough issues, remember those 2 lists of 4 things. I have to use those lists when I'm writing answers to questions I've not seen before. It makes sure I spot as many issues as possible. Of course, if I do a question for the 15th time, sometimes I spot something new. But the point is, the first time I do it, I can always spot enough to get more than full marks, because I've got a tried and trusted technique based on having reviewed your examiner's past questions and answers. That's all I'm doing. Well, be happy. That is our first exam question out of the way. We can't do that many of them during the tuition phase because I've got stuff I have to tell you from the notes. We've got to cover the syllabus. Once we get to revision, the 4 revision sessions on the revision course afterwards, that's where we're just doing solid questions, applying the technique over and over again to all the big question types that come up. Well, we've almost finished for the evening. Let's just go back into the class notes, where we're not going to go very far with chapter 2, just finish off just an intro to it, because to be honest, the question has largely covered it for us, in terms of the first section at least. So, Code of Ethics for Accountants is the first section we look at. And as we've just seen, this comes up a lot for a lot of marks. Fraud and error is an audit standard 240. It's an audit standard you've seen on the F8 paper. It's not that difficult and it doesn't come up much on P7. So it won't take us long to look at that. And then liability is all about when do auditors get sued, and how much for, and what can audit firms do to restrict the amount they may have to pay. Bear in mind, if a $5 billion company collapses and the shareholders lose everything, they might choose to sue the auditors for $5 billion of losses. And trust me, 5 billion would wipe out even the biggest audit firm in the world. So this is critical. In terms of the class notes, if we move on to page 20, and we'll just finish off the evening on here. As it says at the top of the page, anyone involved in the world of finance, accountancy, audit, etc. must be trusted. And because of that, our behaviour is very, very important. And that's what ethics is. Ethics is behaving properly. The ACCA has a code of ethics. It is based on the international code that is produced by the Ethics Committee of IFAC, the International Federation of Accountants. So just going back to chapter 1 there, the regulatory framework. And as I'm sure you remember from F8, there are 5 fundamental principles, and you need to remember what those mean. I would hope that those are so basic that I don't have to go back over them here. You need to remember that because ethics is about behaviour, it's very difficult to have a set of rules when there are so many potential situations that could arise. And because of that, we have something called the conceptual framework, principles. Those 5 principles we just looked at. And we are meant to apply those principles to any situation that arises. For common situations, the Code of Conduct gives us their preferred response. It tells us what they think we should do, but it also says in all situations, apply the principles. That's the best approach. Now what the notes then do is remind you about the main threats to objectivity, lists examples because at P7 they shouldn't really need explaining, or most of them shouldn't, but there are 2 or 3 in there that I do need to say something about, but we'll do that in our next class. So, we've made it to the end of class number 2 and we have done our first exam question. Please make sure you review the question, not so much for the technical answers, but review the question for the approach that I took. I read the requirements to identify what type of question it was, ethics professional issues. I then remembered my technique, which is 2 lists of 4 things to think about. That helped me plan my answer for the issues. I looked at the marks to tell me how many points I needed to make. And once I felt I had a decent answer plan, I then thought, okay, before I write this answer, I've got to think about the technique as I write it. I thought dates, I thought explain why, I thought try and write at least 2 to 3 lines, and all those thoughts we were talking about as the answer went down on the page. And that's how you make sure that all the way through the exam, you are maximising the benefits in your answer and maximising the marks. Now I know some of you earlier pointed out that you thought the study planner wasn't yet up. I will investigate that tomorrow morning. And when you see the study planner, there will be a homework question after this session, another ethics type question, again from a past exam paper in the revision kit for you to have a go at. Thank you all very much for listening intently, asking a small number of questions, but a small number of questions is certainly better than no questions at all. And I look forward to seeing you next week for class number 3. Thank you all very much, and bye-bye.